Okay, good evening, ladies and gentlemen. Welcome to today, Thursday. So, my advice to everyone is that before you start trading, and if you want to trade, prepare for the trading day to make out your watch list to get the market sentiment. The first thing you need to do is go to this website, useconoday.com. And today is Thursday. We have to look at the stuffs in red to gauge what the market sentiment will be, to see what is going to be out for the day. We see the OPEC meeting, and we see jobless claims, and then we see the EI petroleum status report. So this one is the main one that you're going to be looking at, jobless claims. This can cause a big reaction in the market. And then after looking at this, you have to go to cnbc.com to look at the daily headlines. And we don't have much, just talking about Russia, but on the jobless claims front, I was telling you about the jobless claims. It came out at 8:30. Let's see. Jobless claims. You have to go to the news. You can try to know 5 things to know before the market opens. The news is just for you to gauge what the market is, just to gauge market sentiment. It's there for you to gauge. Then private, you see that private payroll increased by just 128,000 in May, the slowest growth of the recovery. So now it's just for you to gauge market sentiment. It's saying that the private payrolls increased by only 128,000. It is very slow increase. And we've seen the news, 5 things to know before the market open, just to gauge market sentiment. Stock futures rise as Wall Street tries to rebound from Wednesday losses. Okay, so it seems the market is rising. Oil falls after report that Saudi oil is falling. Okay, Facebook, that's Meta's Sheryl Sandberg is stepping down. Elon Musk tells Tesla workers to return to work or resign. Okay, not to work from home again, I guess. White House to cancel students' debts for 500,000 students from current college. Wow, interesting. So these are the 5 things to know before the market opens. And then the next thing you have to go look at is futures. So looking at this, you have to ask yourself, what is the trend? Right? Looking at futures before the market opens on Thursday, 2nd of June, you have to ask yourself, what is the trend? We see that here from May 30th. This was May 30th was when? May 30th was Monday. The market was closed on Monday. So from May 30th, Monday, the market was in a downtrend. How do we know it's a downtrend? A downtrend is characterized by lower lows and lower highs. Lower lows, 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 low. Just like that, impulsive, corrective. Impulsive is larger. Impulsive is larger. Little bit of corrective. Impulsive, large. Corrective, impulsive, large. Corrective, impulsive, large. And going into the 31st May, which is Tuesday, we see that. Well, let me get rid of all these diagrams. Yes, let me get rid of all these diagrams. So we see it's on a downtrend, and then here we have a pause. It's no longer going down in this direction. It's what do we say? It's now in sideways movements. But before the sideways movement, this downward direction, high, lower goes down, we saw that it changed here. Lower lows, lower high, lower lows, and then this high broke this high. So it broke this high, meaning that the downtrend is over for now. See where the downtrend broke? The downtrend is over for now. See that? Touch, 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 and then it broke. It broke it, right? It broke it, meaning that the downtrend is over. But then we see when it broke it, we see that we have the lows here and when you have the highs here. So when you have lows here and highs and prices moving in between, we are in a sideways movement, and that's where you draw your box. Draw your box in there. We're in a sideways movement. You draw your box, signifying prices are sandwiched in between this box. So until we break either the top or we break the bottom, we are going to be in a sideways movement. And finally, on this day, June 1st, which is June 1st, which is Wednesday. But before that, look at what the market did on Tuesday. Tuesday, when the market opened, it went down, lower low, and then higher high, and then started moving sideways into June 1st, which is Wednesday. What did the market do? The market opened up. It couldn't break this high. It couldn't break this high, but then went low and broke this low, meaning that it has broken this low. It's now continued the downtrend. It went for sideways and then broke this, continued the sideways movement, and then it came back into this box. Came back into this box, as you can see. As you can see, prices came back into this box, broke it again, came back. Let's guess, see how prices were just respecting this place, respecting the box. Prices were just respecting the box. See that? Prices were just respecting the box. Broke it, came back out, it became resistance. Became resistance for a bit, and then finally broke it into the box again. It broke into the box again. Let me draw this one too. Price finally broke into the box and then came back down today. So when it came back down, we have this high, we have this low. Prices could not move below. Prices could not move below. See that? So I've drawn this. Anytime you have prices sandwiched in between a high and a low, you are in a sideways movement. What you want to see in a downtrend is lower lows, lower highs, and what you want to see in an uptrend is higher lows, higher highs, higher highs, higher lows. That's what you want to see in an uptrend. So right now we are in a sideways movement. Sideways movement. So what did prices do? Let me not draw this too far. Right here is good, because it stopped respecting it after this move. So what did prices do? Prices came here, came to this low, went up, came down, respecting this prayer low, and then broke it again. Got here, it couldn't go above, so which means we're in a sideways movement. It came down. This morning it started coming down. came down all the way to this place and made a double bottom. After the double bottom, prices rallied. From there, prices rallied, broken this high, because if it broke this low, it means we are going to start going lower. If it broke this low, came back, couldn't get back in, we are going to go lower. But what the prices do, came here, look for a bounce, because it could be a double bottom. It bounced, got to this place, watch out, because it might get here and come back down. But instead of that, it broke it with force and it's heading straight to this other resistance. Prices got there, broke it, and it's still going higher. So this is what futures, you gotta always look at futures. This is what futures did today. Thank you for watching my video, and always keep your eyes on futures, your support resistance, technical analysis. This is what will help you in becoming a better trader.